Let's invite our next guest then. On that note, we have Mahesh Patil, Co-Chief Investment Officer at Aditya Birla Sun Life AMC, joining us. Mahesh, good morning. Thanks a lot for joining us. How are you approaching this market as a fund manager, where you're seeing so much price damage in so many blue chips?
Yeah, so the markets in the last couple of weeks have been very volatile. We've seen a sharp correction from the market of more than 35%. And obviously, in this crash, we have seen some of the larger cap names correcting significantly. Good quality blue chip stocks have also corrected, which were doing well in the last 2 years. So I think it's providing a good opportunity to buy good blue chip large cap names and quality names at a reasonable valuation. Obviously, because of the impact of the virus, there's going to be a significant impact on the economy, and you will see a significant slowdown in growth in the next few quarters. And a lot of the sectors will get impacted. It will have impact across sector, whether it is consumption, whether it is the services sector, infrastructure. And to that extent, I think one has to really look at companies or sectors, okay, which would get impacted temporarily and which will be able to bounce back once things normalize. There could be some medium-term impact in a few sectors because the recovery from the current slowdown, okay, will be slow and gradual. So I think there is some rejig in the portfolio which we are doing at this point in time. Stocks which we earlier wanted to buy but were very expensive are now coming in at a price point which are comfortable from our perspective, and we're trying to rejig the portfolio in some of these names. And overall, I think trying to keep some amount of liquidity in the portfolio, because I don't think we are still, while we have seen the bottom in the market, but market will provide opportunities where it will probably again retest the earlier lows. And some amount of liquidity portfolio will be useful to really buy stocks, okay, at really attractive valuations.
Okay. Hi, Mahesh. Have you noticed any change in investor behavior? Are they putting more because things are cheap, or are they pulling out because they're looking at their terrible NAVs?
Interestingly, in this month, in the month of March, we've seen the flows have actually been good. In fact, compared to the last few months, I think you will see record flows in this month. At least that's what the initial indication is. So I think the investors are acting in a much more mature way. They're seeing that the market correction is offering a good opportunity to really make some larger equity allocation, because I mean, over a medium to long term, one should definitely make good returns from these levels. Also, I think probably some of the asset allocation funds would indicate that they need to increase the equity allocation, right? Because the relative valuations of equity vis-a-vis, say, debt or other asset class are starting to look attractive. So that allocation would have also come into the market. So I think at this point in time, we are seeing inflows have been fairly steady. We're not seeing any, there have been some redemptions, but overall net basis, it's a fairly decent inflows. Obviously, the market remains weak for a sustained period of time. Then the initial bout of money which has come in, I think that might slow down. And I think the next month will be crucial to see how the market stabilizes.
Okay, Mahesh, hi, good morning. So when you started the discussion, you said that we are looking to rejig our portfolio now. What do you do with some of these marquee names that have been hit very badly in this crisis? The Bajaj twins, for example, both Bajaj Finance and Finserv are now down 40% during the crisis period. Do you look to buy into these names, look at it as an opportunity, or do you stay cautious here?
Yeah, so as I mentioned earlier, I think we'll have to look at companies, businesses, okay, which would definitely get impacted because of the lockdown, what we are seeing. And overall in the NBFC sector, we have seen that the retail side of that, the retail credit, has done fairly well in the last few years and has been fairly stable. And how the investor, how the consumer behavior changes because of this lockdown is something which we'll have to see. Clearly, there is going to be an impact in terms of growth. A lot of consumer discretionary items will see a significant slowdown in the coming months. So to that extent, some of these NBFCs which were growing at a pretty healthy clip, upwards of around 25-30%, I think there clearly one would see a slowdown. But I think more importantly will be to gauge whether you will see any major increase in the defaults on the consumer credit side, because that is something which can lead to a derating of multiple of the retail focus NBFCs. And that, I think we're still not clear on that. I think it depends on how far and how deep this lockdown is to really take a call on that. Obviously, good companies, when they correct significantly and look attractive, it's a good time to look at those names. And the stronger names which have got a very good risk management process, very strong on the liquidity side, I think they should be able to bounce back much better and consolidate their position once when things settle down. So I think some of these names are looking very attractive, but one has to really monitor and see how the impact of this will impact in terms of NPAs and growth, which still we are trying to assess that.
Okay, Mahesh, the one sector which was already struggling because of lack of demand was autos. You think because of this whole, coronavirus issue, that's a bit of a death knell for stocks like Maruti, TVS, Hero MotoCorp, or you think at these levels there's a good option to actually buy some of these names now?
The auto sector is actually going through the transition, right? From next month onwards, we would see the BS6 transition. Obviously, that has been deferred a bit. But again, that would have led to some kind of a slowdown, which we were expecting anyways because of the cost increase. But because of the COVID, obviously the demand for automobiles and this thing would slow down considerably, especially the higher tickets. I think the whole consumer confidence, I think, will really get shaken, and you will see the demand for higher ticket vehicles that will get impacted much more. So I think the growth for this year, which FY21 we were looking at, I think that numbers will definitely cut down. You might see a decline in volume numbers for the overall automobile sector. But a lot of these companies, automobile companies, are fairly strong companies. Their balance sheets have been good. They're sitting on a good amount of cash. Cash flow generation is strong. Also, the decline in the raw material cost, especially steel and other components, that will help them to cushion and protect the margin. So while the volume growth will clearly take a knock in the next few quarters, and to that extent you will see downgrade to earnings, but I think margins, they could be able to hold on to that. And since the balance sheets are fairly strong, I think stocks are looking fairly attractive. Some of these companies are now offering very good free cash flow yield. So I think one is willing to look beyond the next 1 year. I think that sector offers great value at this point in time. Especially the two-wheelers are looking very attractive at this point in time.
Okay, thank you very much, Mahesh Patil, for your suggestions and for your advice. That's the way you're going to see Birla